Hey, do you mind paying for this? I don't have any cash.
Sure, I'll just put it on my credit card. I'm never going to pay it back anyway. 'Cause I have $30,000 in credit card debt. When they call, I tell them I can't pay it back yet. Credit card debt? Tomorrow I may buy myself a dining room set or this Boba Fett. Credit card debt, credit card debt, credit card debt.
Deciding whether or not you want to get a credit card for the first time is a little bit like deciding whether or not you want to have a baby for the first time. And sort of in both cases, by the time you figure out if it's the right thing or not, then it's already too late, and you're either knee-deep in diapers or you're knee-deep in debt. You shouldn't sign up for a credit card unless you feel comfortable and assured that you can pay off the credit card in full every month. As with the comparison with babies, you should start with one credit card and see how you do with that before you go on to more. The best way to get out of debt is to avoid going into debt in the first place. When you go into debt, you're paying interest, and you're paying compound interest, which is interest on top of interest. And this is something that Albert Einstein supposedly referred to as the most powerful force in the universe. Because once you get started, once you start walking down that path, it is extremely difficult to get out of it. If you're in a situation where you do go into credit card debt, if you're not paying off your balance in full every month, then you should start by targeting the credit card that has the highest APR, the highest annual percentage rate, because that's the one that's kind of piling debt onto you the fastest. And then once you've done that, go after the ones that have the next highest APR. You should really be thinking about it in terms of the APR that those different cards are paying, and not in terms of what the size of the balance is that you have on those different cards.
Welcome to 2020. Tonight we talk about a four-letter word that's a curse for many families: debt. Many Americans are drowning in it, especially now as those holiday shopping bills come rolling in.
So we're going to help with the stories of real people who've opened their doors and their financial books to us. But first, the big picture.
Which isn't pretty. America's credit card debt has soared to a record $800 billion. People are putting out plastic to pay for everything, from groceries to 99-cent iTunes. And personal savings are at the lowest point since the Great Depression.
Living within your means has apparently become a quaint idea, but it can be done. Case in point, two families we found living on opposite sides of the financial divide. Later, you'll meet the cheapest family in America, but now the big spenders who find themselves going for broke.
Meet the Petersons.
Did you guys like this better than Hawaii?
Matt is a software engineer, and Susie works mostly at home, raising their three daughters. They live in an upscale California neighborhood. Their 4,000 square foot home has a pool, a huge walk-in wine cellar, even its own movie theater. They drive nice cars. Those kitchen countertops are custom granite. They even own 2 vacation timeshares. How do they do it? They're in debt up to their eyeballs.
We have $60,000 on credit card right now.
Today their future is as gloomy as the water in their pool, their bank accounts as empty as the wine cellar, and their finances as tattered as the inside of their once glorious home.
What keeps you up at night worrying about your financial situation?
Well, I woke up like at 2:30 this morning because yesterday we went to the diner and tried to use the debit card and it didn't work.
So how did the Petersons get so far in debt? It began 6 years ago when Matt lost his job and spent a year out of work. Susie opened a scrapbooking store and then a second before the business failed early last year. That cost them about $200,000, most of it borrowed money. There were also some bad real estate and stock investments, yet even as their financial situation worsened, the Petersons continued to spend.
We took more vacation this year than any year.
What?
Since we've been married.
You guys.
I don't know. I mean, okay, we need to be punished, I guess.
Do you now wish you hadn't, though, spent that money?
Nope.
You don't regret it?
I don't regret it at a minute. And sometimes we ask ourselves, well, if we were to die next month, how would this decision be affected?
But you're the parents of 3 girls, and an argument can be made that you can't live life like I'm going to die tomorrow and let's just spend.
Mm-hmm.
Well, one of the first things that I noticed was their balance sheet.
Robert Pagliarini is a successful financial planner and author of the 6-Day Financial Makeover, a step-by-step guide to transforming your financial life. The Petersons gave Robert access to their financial records, and he will try to rescue them from economic ruin.
They have their net worth listed at about $8,000.
Net worth meaning?
Meaning you take your assets and you subtract what you owe. So if they liquidated everything, they would have $8,000 left.
That seems like a very small amount
It's
of
a
money.
very small amount, and I don't even think it's accurate.
You think it's worse?
I think it's worse than what they've shown.
For more than a year, the Petersons have relied on credit cards to keep financially afloat, piling up the debt by using one card to pay off the others.
How close to the edge of ruin do you think you're living?
We are on the edge.
$60,000 spread out over 12 different credit accounts, and each month they pile on more debt. They are living in a financial house of cards, and it's all about to come crashing down.
What, in the worst case scenario, could happen to this family if they don't make changes? Could they lose their home?
They'll lose their home, they'll lose their cars, they'll go bankrupt. It's not a good situation. They need to take immediate action.
Like not next year, today.
I'm thinking yesterday.
The Petersons are not alone. Nationally, credit card debt is growing, almost tripling since 1989. More than half of all cardholders don't pay their cards off each month and carry an average balance of around $2,000. The old-fashioned way to remain debt-free? Well, that's now just a punchline.
Did you know millions of Americans live with debt they cannot control? That's why I developed this unique new program for managing your debt. It's called Don't Buy Stuff You Cannot Afford.
Well, of course, don't spend what you don't have. But we do. Because we want that instant gratification. We want it now.
Introducing Chase Freedom.
And the credit card companies spend a lot of money every year, telling us how simple it is to have it now.
Bad credit? No problem.
We'll give you the green light.
This card can help get you there.
Everything you need
To give you the freedom.
to make your wishes come true.
Credit card companies market their products the same way drug dealers do.
Professor Elizabeth Warren teaches contract law, bankruptcy, and commercial law at Harvard University.
Just try it out. And then, once you're hooked, once you've run up that credit card bill, now they got you.
Our mailboxes are full of solicitations encouraging us to get more credit or spend more of the credit we already have. Even the Petersons continue to get offers.
So you have $60,000 on your credit cards, and you're still getting applications from banks.
Professor Warren says ironically the Petersons, who struggle to make even the minimum payment on time each month, are much more valued than the family that pays the full bill every month.
Credit card companies have a special word for the customers who pay in full every month. They're called deadbeats.
That's because 70% of the profit made by credit card companies comes from interest payments made by cardholders who carry a balance every month. The Petersons, who make minimum payments every month and pay a lot of money in interest, would seem like the perfect customers. But Nessa Fettis, speaking on behalf of the credit card industry, claims her clients do not want customers like the Petersons.
Credit cards should be used for short-term credit. They should be paid off in a short time.
But aren't the credit card companies banking on people not being able to pay?
Absolutely not.
And banking on people being late?
That does not help the card issuers. People who pay late are at a greater risk of defaulting than people who don't pay late.
But Professor Warren says that's not true. Nothing helps the credit card companies' bottom line more than fees and high interest rates they earn from consumers in trouble, like the Petersons. Take the Petersons' Chase Perfect Card MasterCard. The fee for a late payment or going over your spending limit, $39. The default interest rate they can charge if the Petersons pay their Perfect Card on time but are late on the car, a mortgage, or other payment, 32%. The ability to change any of the terms at any time for any reason and disclose all of this in a nearly incomprehensible contract? Priceless.
Well, we agree that the disclosures could be better, and we are on record as saying that. But they're a great product. Pay off at the end of the month and pay no interest. Every cardholder has that opportunity. They make that choice.
The number one thing that gets people into financial trouble is overspending or the lack of control using a credit card.
This is Howard.
Howard Dvorkin is a CPA and founder of Consolidated Credit Counseling Services. He's echoing what everyone knows. Credit cards can be trouble.
People tend to spend about 30% more when they use a credit card.
But credit cards can really be more like a dog because they can bite you, sure, but they can also be your best friend. How? Let's count the ways. First, safe for online shopping. If you're unsatisfied or don't get what you paid for, credit cards allow you to withhold payment while issues are resolved. You can't do that with a debit card. Next, some credit cards double factory warranties. That's really handy when you're buying big-ticket items like appliances and electronics. And then there are rewards. Things like free flights, free hotels, cash back. And all you got to do to get this stuff is pay with plastic instead of cash. Next, travel protection. Some cards offer reimbursement for lost bags and rental car coverage. And finally, building credit. Using a card and paying it off monthly keeps your credit file active and keeps your score looking good. So even though credit counselors are quick to point out the perils of plastic, even they'll say they're not all bad.
We live in a cashless society. These pieces of plastic are part of our cultural DNA. However, people need to use them responsibly.
Bottom line, as long as you pay them off every month, you're kind of crazy not to use a credit card. Now what you need, though, is the best cards for you. And I can help you with that. Just go to MoneyTalksNews.com and do a search for credit cards. For Money Talks News, I'm Stacey Johnson.
Credit cards, they're convenient, but if you don't have the discipline to pay them off in time, they can really wreak havoc on your credit score. This is especially true for college students who are just starting to build credit. In fact, according to a recent study by Sally May, the average amount of debt carried by college cardholders is more than $3,000, and the average number of cards per student is a whopping 4.6 cards. The problem is so widespread, many go as far as calling this an epidemic among college students. So what's the answer? Should students have credit cards at all? If you take them away, how will they build credit in preparation for the real world? To talk about this pressing issue, I'm joined by Scott Gam, a college student at NYU and founder of the personal finance website, HelpSaveMyDollars.com. Hi, Scott. Great to see you again.
Tanya, it's great to be here. Thank you.
So are you surprised when you hear these numbers about college students holding so much debt and having so many credit cards?
No, I'm not surprised because credit cards for students are readily available. You see credit card companies spending tens of millions of dollars to be able to set up marketing tents and marketing booths on college campuses to try to entice student customers. And what happened was in 2009, credit card companies spent $83 million to promote student credit cards, and as a result of this marketing, they got another 53,000 new student credit card accounts.
But hasn't all of this changed somewhat due to the new laws in place?
The Credit Card Act, those new laws, which went into effect in February of this year, did make an impact. What they said was that credit card companies cannot give out incentives to students to sign up, so free t-shirts, free lunches, but still, credit card companies are still setting up tents and booths on college campuses, and it's creating a huge problem because students want to feel cool and they want to have a credit card and be able to spend money, but most of them don't know what they're getting themselves into.
So the end result is that you say college students simply have too many credit cards.
They have too many credit cards. Sally May says that 50% of college students have 4 credit cards or more. Now, I propose, as a college student, that all students have just 1 credit card for the sole purpose of building credit and not for extending your spending habits.
But let me ask you this. Should college students have credit cards at all? I mean, at this age, at this stage in life, are they really responsible enough to handle them properly? I mean, some of these numbers seem to indicate that they're not.
Well, that's definitely a great point, but I think that at some point you need to start building credit.
Right.
And if you can start at a young age, your sophomore year of college, by the time you graduate college, and for 2 or 3 years of responsible credit use, you'll be in a great position to graduate college with a great credit score. So with just the knowledge of knowing how to use your credit card, paying the bill off in time, not exceeding your credit limit, and having responsible spending habits, you can accomplish a great credit history.
Absolutely. Now let's talk a little bit about prepaid cards, because a lot of college students are turning to these prepaid cards as an alternative. What do you think of them?
I think prepaid cards are useless. You may have heard of the Kardashian card, which launched in early November, and it was pulled off the market after 3 weeks. It got a lot of criticism for the high fees associated with the card. And this is not just a Kardashian card. All prepaid cards have high fees. $100 just to own the card, and another $1.50 for every time you use the card. And basically all a prepaid card is you fill the card up with money, and then you just spend it. It does nothing to help build your credit, doesn't report to the credit card bureaus. So it really...
Do you think a lot of students are confused about this? Do you think that they believe they're building their credit score when they use these prepaid cards?
Definitely, because it looks like a real card. It has the numbers and has the MasterCard or Visa logo, but I think students, there's not enough education out there to show students that, hey, this is not the right option.
So what do you recommend? What do you think college students should be doing?
I think a secured credit card is the best way to go, and this is where you put money on it. You do pay some fees, but it does report to the credit bureaus in most cases, and this is the best way to build credit. And after a few years of responsible use with this secured credit card, the credit card issuer will most likely extend you a more traditional line of credit.
And you say there's no reason to have more than this one card. But let me ask you this. It is a known fact that your credit score increases the more lines of credit you have. So if you are an incredibly responsible college student, is it then okay to open a couple more cards just to increase your line of credit?
Yes, that's absolutely right. You can open some more cards, but remember, don't open up too many in a short period of time. Spread it out. And the reason I caution opening up more than one card is I think students will just get tempted to keep using those multiple cards and rack up a lot of debt on restaurants and bars and
It's
coffee.
hard to not get tempted as a student,
It
isn't
is.
it? Now, what advice do you have for those students out there who've already racked up a ton of credit card debt?
Absolutely. Well, you're in a tough situation, but you want to try to find any money you can to start paying those cards down. You want to contact your credit card issuer and ask them to lower the interest rate. Most times, by making a simple phone call, they'll lower your interest rate by 2 to 3%. Next, you want to see if you can open up a balance transfer card. That's where you open up another credit card at 0% or 2%, and you actually transfer the balance to that low interest credit card, and that saves you money in interest. And over time, you'll be paying off your debt.
Does that affect your credit score?
Opening up the balance transfer card, if you open up one, it won't affect your credit score, but again,
Don't forget about those balance transfer fees too, though. Those can add up.
That's true. The
Those
fees
can add up.
are it, but the more savings you have from that interest will overcompensate those fees.
Scott, we know that so many kids out there sometimes don't know where to turn with their financial questions. Do colleges offer financial advice or education to their students?
Well, it's going to depend on each college. I personally think that colleges don't do enough to promote financial literacy, and that's part of the reason why I work on my website, helpsavemydollars.com. And I think certainly in high schools, there's barely any financial knowledge. Only 4 states require students to take personal finance courses, and another 20 states require personal finance education to be incorporated into other classes.
We agree with you here at Good Money. We think that financial education is a dialogue that needs to begin early, right?
Definitely.
With your kids at home. All right, well, thank you so much,
Thank you
Scott
so
Kim.
much, Tanya.
The economy is in freefall, and no one's sure where rock bottom is. And as the mortgage crisis and mounting job losses melt away the American dream, another fundamental economic problem is being exposed: America's debt epidemic.
Middle-class America is under attack.
We begin then.
Elizabeth Warren is a Harvard law professor in charge of the oversight panel monitoring the government's $700 billion banking bailout. She's also a leading expert on consumer debt.
Is this the next crisis?
It's not only the next crisis, it's the now crisis. None of these things are separated from each other. We are in debt crisis, not just mortgage crisis.
Want to refinance and get cash? Before the housing bubble burst, many Americans were able to take loans against the value of their houses to stay afloat, using that cash to pay off credit cards and other debts. But with home values plummeting and unemployment rising, millions now have nowhere to turn.
I never knew this would happen.
And American consumers are now carrying an unprecedented, staggering amount of debt: $2.5 trillion.
I'm so sorry.
So how did we get here?
This is a big one.
Vicki Harrington's story is sadly typical.
$125,311.50.
Like so many people, she is drowning in debt.
Our telephone was shut off. Our cable's been shut off. Our electric's been shut off.
Not long ago, Vicki and her husband Jim were doing fine with 2 steady paychecks. Vicki's son Ryan was in his first year of college.
We were doing okay. But when my son got sick, our whole life changed dramatically.
Medical bills are a leading cause of debt in America. And as the Harringtons discovered, they were just one serious medical emergency away from financial ruin. In 2005, Ryan was diagnosed with a rare form of lymphoma. By the time doctors caught it, the cancer had spread to his brain.
A lot of crying, a lot of praying on the floor.
Luckily, they had health insurance, but Vicki stopped working to be by her son's side during chemotherapy, and the bills began piling up. Credit cards were an easy stopgap.
We had to use credit cards because that's the only way we could survive.
And when Ryan's treatment topped $2 million, their insurance maxed out, and the really big bills started rolling in.
These bills are for chemo again, $111,375.
Yeah. The good news is that Ryan's cancer is in retreat. He's in remission and back at college. But the illness has left the family destitute.
And how much outstanding medical debt do you figure you have as we sit here today?
100,000.
100,000.
Mm-hmm.
Halfway across the country in Minnesota, the Snyder family is in economic freefall for another reason: job loss.
How stressful is this for you?
It's very stressful. You think about it every day.
Chris's husband, Matt, a plumbing contractor, was recently laid off. Getting by on her one salary has them hanging by a thread.
You're robbing Paul to pay Peter. You know, what can I pay out of this check? And what's going to have to wait till the next check?
Credit cards are now a lifeline for the Snyders as they desperately try to stay afloat. Like so many victims of the economic crisis, they're also struggling to hold on to a home that's worth less than what they paid for it.
The house across the street is for sale for $100,000 less than what our house is mortgaged for.
They've also got a car loan, student loans, and credit card debt that's $25,000 and growing.
You still have to use this card once in a while to get by.
I do. I've got my car insurance and Target. That was groceries.
You gotta eat.
Gotta eat. Gotta have car insurance.
Harvard's Elizabeth Warren says that too many Americans today are like the Snyders and the Harringtons, accumulating debt, not wealth.
Should we feel sorry for people who are buried in credit card debt?
To me, it's not about feeling sorry. It's about understanding the economic realities. The median American family has tried to hold on to an American dream that their parents could easily afford on one income, and today's family can't pay for on two. They need to make it to the end of this month. And if plastic is the way to do that, that's what families have been doing.
And that means more and more families are sinking deeper into financial quicksand.
All of this is very overwhelming. To know that you may never, ever, ever see the bottom.
How long is it going to take you at this rate to pay off that credit card?
I'm on the lifetime plan at this point. I'll probably be retired.
So who's profiting from this lifelong cycle of debt? We'll show you how the credit industry makes debt pay.
The credit card companies have put the loan sharks out of business.
And we'll go inside the debt collection business to see how far some will go to get a piece of the action. Generations ago, borrowing money was a privilege.
How about giving me a little credit?
Nobody gives you credit, John. It's something you have to earn.
A credit card was hard to come by.
First, you have to develop your character.
And anyone fortunate enough to have one was expected to pay the money back.
You have to have capacity to pay your bills.
But all that's history now. Until the recent financial crisis, easy credit was everywhere. And the credit card industry spent billions to make plastic a way of life and to persuade us that credit was a smart way to buy the things we deserve, even if we couldn't afford them.
The card that won't hold you back.
Do you ever regret having these credit cards in the first place?
Oh, definitely. Oh, gosh, every day.
Chris and Matt Snyder's financial problems are typical. What was once a nation of savers is now a nation of debtors, borrowing money for everything from cars to college. And even before the current spike in unemployment, nearly half of American families were carrying credit card debt, with average balances of more than $7,000. Harvard's Elizabeth Warren says many Americans have gotten used to living on the float, and in the process, the credit card companies have thrived.
There's profit to be made in debt. Not profit for the family, but profit for the people who hawk it.
And Warren says this was no accident. Nearly 3 decades ago, in a move to boost profits, credit card companies lobbied the government to get rid of caps on interest rates.
We told the credit card companies anything goes.
Then they made billions by lending to just about anyone, profiting from charges described in the fine print of those credit card contracts that even Warren, a Harvard law professor, can barely understand.
Credit card contracts have grown from about a page and a half in 1980 to more than 30 pages in the early 2000s. And let me just be clear, that additional 28 and a half pages did not help the customer. It's tricks and traps and trailing interest and pay-to-pays and a whole bunch of things that literally didn't exist 25 years ago.
The Snyders were carrying a big load of credit card debt even before Matt lost his job. Now they can barely make the minimum payments and are falling behind at warp speed.
So more than half of your payment is going to the interest?
Yes. There's a finance charge, $140, and the payment was $220.
So you're at 19% there?
Yeah, I couldn't pay it before. I certainly can't pay it now when you add on more fees and higher interest rates.
But Warren says that's exactly how credit card companies have been making a big chunk of their profits.
They're not looking for customers who can pay off credit cards. They're looking for customers who will hit the sweet spot, fall into the tricks and traps, and incur a $45 fee, a 19% interest rate, a 29% interest rate. After that is just profit, 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 profit.
What you describe sounds like loan sharking, which is illegal. Why isn't this illegal?
That's the best part. The credit card companies have put the loan sharks out of business. The kinds of interest rates that some credit card companies are charging would make Tony Soprano blush.
Riskier borrowers pay more for credit, just as riskier drivers pay more for car insurance.
Nessa Fettis is an attorney with the American Bankers Association, the industry trade group. GE Money, a unit of NBC's parent company that's in the credit card business, is a member.
Why has the industry fought so hard against any kind of regulation when it comes to interest rates?
Well, history has shown that if you cap interest rates, people pay more for credit and fewer people have access to credit. We have supported regulation that makes consumers understand what they're getting.
The ABA says a new law that takes effect in 2010 will make credit card contracts much easier to understand, but banks will still be able to charge whatever interest and fees they see fit.
It's an unsecured loan, which means there's no collateral, there's no house, no car, which is used to encourage people to make payments. It's the riskiest type of loan.
While credit card lending has returned steady profits for decades, the industry is bracing for unprecedented losses this year. Defaults are on the rise.
So how soon before you're not able to pay it at all? And
if my husband doesn't go back to work in the next couple of months, this will be the first thing we stop paying, is the credit cards.
And if they do stop paying, well, the massive credit business has spawned another multi-billion-dollar shadow industry ready to take over, debt collection. And some say the recent tough times are leading to vicious collection tactics.
No, you answer my question.
Some harass.
You slithered over the border like snakes. You're nothing but a financial terrorist.
Others threaten.
Do you want to go to the big house?
This is an industry that makes its money by being out of control. Pay it or your life becomes a living hell.
Coming up, what are your rights? And who is behind this dark side of the debt industry?
What gives you the right to threaten me?
Our hidden cameras are about to find out. For Donna London and Greg Burke of northern Minnesota, getting calls from debt collectors was something that happened to other people.
Just perfect credit. I stayed on top of all my bills.
But when the economy began slowing down in their small town, Donna's cosmetology business dried up, and one maintenance worker's salary wasn't enough to support 3 young children.
I did use the card to pay the bills, and it was just a safety net for me for a while.
The card she's talking about was a store credit card that came pre-approved in the mail, ready to use with just one phone call.
We weren't buying anything extravagant. Food, toilet paper, nothing that wasn't absolutely necessary.
Soon, they fell behind and got trapped in the common cycle of credit card debt. With late fees and a 25% interest rate, the balance ballooned to $9,000, and they could no longer even make the minimum payments.
It's very humiliating.
Once they stopped paying the bill, the store hired a debt collection agency, Academy Collection Service, to take over.
They were calling our house at least 10 times per day.
Like most collection agencies, Academy works on commission, so there's an incentive to be persistent. But there's also a federal law to protect consumers from overly aggressive collectors. For example, a debt collector can't call late at night, lie, swear, or tell anyone about the money you owe. The idea is to protect consumers from harassment.
I totally believe that if you owe debt, you have to pay it back.
At first, Greg says, he tried to explain why his family couldn't pay the entire bill.
I tried to offer some sort of payment plan, and they were unwilling to accept anything I could offer.
The calls kept coming for months, all through the Christmas season. When the phone rang on December 31st, Donna thought it was more of the same.
When I seen it on the caller ID, I didn't even get up to answer the phone because I was nursing my baby. I was just going to let it go.
8:29 a.m.
But when Donna listened to the message a few hours later, she froze. This was a collection call like none she had heard before.
Ever been raped? Yeah.
The message said, "Have you ever been raped?" And then the guy laughed. My first reaction when I heard it was, I can't be hearing this. So I replayed it.
Yeah.
As a woman, that's got to be one of the most terrorizing things you could ever hear.
Donna was home alone with the children. Greg was at work 45 minutes away.
Should I grab the kids and go to my parents? Should I grab the kids and just get away?
When Greg got home, they immediately called the police. Officers confirmed the call came from Academy Collection Service and referred the case to local prosecutors, citing illegal telephone harassment. But no charges were ever filed against the company.
I don't understand why people could do this to me or to anybody. This is not a good thing. You cannot do this to people.
I think it would be hard to surprise me with anything a debt collector could do to collect a debt.
Attorney Peter Berry has sued hundreds of debt collectors and represents Donna and Greg in a federal lawsuit against Academy Collection.
Why would a debt collector leave a message saying, "Have you ever been raped?"
To stir up emotion. What better way to get somebody to return a call than leave a shocking message like that and see what happens?
Berry says that in tough economic times, some collectors turn to more abusive tactics to earn their commissions. The Federal Trade Commission reports that it gets more complaints about debt collection than any other industry.
I've seen everything from physical threats, profanity, threats to the workplace.
But isn't the reality that if people paid their debts, they wouldn't put themselves in a situation where they could be potentially abused by a debt collector?
Sure, debt collectors are entitled to collect what's due and owing to them, but consumers have a right to be treated with truth, fairness, dignity, and respect.
The fact is that the track record is excellent.
Roseanne Anderson is the lead attorney for ACA International, the nation's largest debt collection industry trade group. We asked her about that message allegedly left by someone at Academy, a member of her organization.
Ever been raped? Yeah.
That is insane. That is ludicrous. That has nothing to do with debt collection. If any one of our members actually had to face me and say, "Oh, sure, we do that all the time," I would be shocked, and I probably wouldn't be sitting here representing the industry.
In a letter to Dateline, a lawyer for Academy Collection says he has not had an opportunity to determine if the message actually came from the company. And he says Academy does not tolerate abusive conduct and swiftly fires collectors who break the law. But in fact, Academy has a history of violations. The federal government recently sued the company, and Academy paid a fine of more than $2 million for what prosecutors called harassing and abusive tactics.
Whether it's correct or not, debt collectors have this image of phoning at all hours, harassing people. Where do you think that image came from?
I know that it's outdated in terms of a stereotype. But I also know that it came from the bad acts of a few.
So you would say this is a minority of the debt collectors getting a majority of the attention?
Absolutely.
So do most collectors follow the rules as the industry spokesperson says, or is breaking the law standard operating procedure?
Do you all work together?
Oh, yeah. Coming up, we talk to a group of people who make collection calls for a living and bring our hidden cameras along.
It's worth it for people still to be illegal and collect money.